Snap reported earnings this week, and often this is one of those fireworks events for the stock market. But normally, Snapchat's stock drops after earnings because they're a disappointment to investors. The opposite happened this week. It's a little bit strange because Snapchat is not making money. And so on the bottom line, things aren't improving all that quickly, but the top line actually looked pretty good. So I want to dig through the results and kind of go through what we can take out of this earnings report and whether this is even a stock to consider buying long-term. I have a very, very small stake in Snap on the idea that this could be a potential competitor in social media and advertising, and they have some interesting technology in augmented reality that could be a tailwind. But like I said, very small stake because it is kind of a moonshot. But solid results were good nonetheless. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's get to the market's reaction first before I get to results. You can see the reaction here. Shares are up 27.4% for the week, and this gain happened on Friday, so after results were announced. If you take a step back, shares have been extremely volatile, and like I said, this stock often falls after earnings. This was their last earnings report for the fourth quarter, from $17 per share down to about $11 per share. If you just go back over the last 5 years, it's just been all over the place. If you were a shareholder 5 years ago, you were up just slightly after the recent earnings announcement, but shares peaked at about $83 per share. So obviously down a significant amount since then. But let's get to the numbers. This is the press release, and you can see the first quarter revenue increased 21% year over year. This is really what jumped out to me because one of the challenges for Snapchat has always been actually monetizing their business. They've actually done a pretty good job increasing their user numbers over the last few years, but they haven't been able to turn that into better revenue from their user base. But that is improving, so revenue is up. Daily active users increased 10%. That's a pretty big number when you have 422 million users. And they did generate positive free cash flow of $88 million in the quarter. But like I said, on the bottom line, they did lose $305 million. That's a lot of stock-based compensation in there, but I'll get to some of those numbers in a second. I want to highlight a few of the numbers and the things that are working for Snap. Like I said, those daily active users numbers, time spent watching Spotlight content was up 125% year over year. So this is where they're really trying to figure out what content is working. So they're leaning a lot into the AI-powered content and AR lenses. Snapchat Plus subscriptions, which includes some artificial intelligence tools, increased to 9 million subscribers in the first quarter. That's I think a huge number for a company that's looking for a business model that works. And if you can get customers to pay quarter after quarter, that's a great business to be in. Small and medium-sized advertisers increased 85%. This is exactly what you want to see. And they continue to invest in their augmented reality platform. So this is their AR glasses and all kinds of other products that they're trying to get people to use more as you have these capabilities on their phone. The question is, do people actually want to use augmented reality in the way that Snap is building? There's maybe questions behind that, but seeing any sort of momentum is really positive for the business. Well, let's put some of these numbers into context. And Snap always does a nice job giving these long-term charts. You can see that this is the user growth. Most of that growth happened in the rest of the world. So from a monthly active user standpoint, that's positive. From a revenue per user standpoint, it's not necessarily so much. Revenue by geography, pretty broad-based growth. And you can see that North America was a big surprise given the fact that the user growth was in the rest of the world. That's where you see these numbers, I think, were really the shocker and the positive surprise to me. 17% growth in revenue per user in North America and 20% in Europe. The rest of the world actually didn't quite keep up. So this is where the users are growing, but not necessarily being monetized quite as well. You actually want to see, if you want to see an impact on the bottom line, you need to see this in North America in particular. That's where there's going to be the most money. The downside is Snap is not profitable, and margins are actually on the decline. Adjusted gross margin down 4 percentage points to 52%. And a big reason for that, this is something they've been doing for the last year or so, is investments in infrastructure. That jumped from $288 million a year ago to $338 million in the past year. This is going to be infrastructure that's going to help out their advertising business, that's going to build generative AI products that they're trying to launch, back-end work for augmented reality. So it's the kind of investments that you need to make up front, but then you need to see that they're actually paying off. So what I think the market is reacting to is these investments that were made over the last few quarters are actually starting to pay off with higher revenue growth. And eventually that will lead to better free cash flow and profitability. Expenses were up a little bit in the quarter, but they did announce a layoff in the quarter. So these should continue trending downward at least a little bit. But we'll see where that ends up. This has always been the challenge for Snap, is actually controlling their costs to the revenue that they're generating from the business. Here is the other kind of strange thing with Snap. Their stock-based compensation has always been absolutely out of control. Some of that is supposedly going to start to reduce over the next couple of years as they lap some higher stock prices when some grants were happening. But where you can see this is the shares outstanding and underlying stock-based awards. You can see that the total number is actually on the decline now. So that should be a positive in theory, but we'll see if this continues. The real challenge for Snap has always been having a strong core business and then actually being prudent with what you're doing with the capital. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So all in all, there's, I think, generally some positive signs for Snap. The user numbers are pretty good. Revenue per user is improving. It seems like their advertising business is getting a little bit better, and they're getting some traction from some of this investment in infrastructure. Now, that needs to continue long term because this is just sort of like a green shoot. Investors are seeing, okay, there's this big investment that you're making in infrastructure, and there should be some sort of payoff. And you see one quarter where it's like, revenue is growing. So that is a positive sign, but now we need that to continue. You need this revenue growth to compound at 20+%, not just this quarter, but next quarter and next year and the year after that. And that's where Snap has always run into problems because their business just hasn't been all that sustainable. So I am optimistic about what this company can do and the potential upside. Market cap of $24 billion. So given the number of users that they have and the potential that they have for monetizing that business, this could potentially be a solid investment if they are able to grow their revenue numbers. Management did say they expect revenue to be $1.225 billion to $1.255 billion in the second quarter, so expecting this revenue growth that happened in the first quarter to continue. So it seems like they're in the right direction, but a long way to go to regain investor trust. Like I said, very small position for me, but not one that I'm going to be buying until we see that this is actually a step change in the way that Snap is operating as a business. But what do you think of the results and the market's reaction? Love to hear your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.